Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. It's a new week, it's a new day. And guys, I hope you guys got a lot of rest. Had some interesting price action we had last week. And I'm hoping and praying that it continues into this week because it was incredible. And I hope you guys made a lot of money. All right. Now, all we do here on Uncle Charles' YouTube channel is we identify levels and we identify setups and we look to react to them unbiasedly. My principle of trading is know the levels, know the setups beforehand, and then you trade them unbiasedly in real time, up or down. Doesn't matter. Doesn't matter. Because you can make money to the upside or to the downside. Now, if we zoom out, right? If we zoom out and we look at the SPY chart, yeah, it's overall still bullish. But my target audience are short-term traders. Okay? Preferably day traders. Okay? Short-term traders and day traders. Okay? I'm a short-term trader type of guy. I like to make money as soon as possible. I don't like to wait too long. I don't like to wait 2 weeks. I don't like to wait 2 months. I don't even like to wait 1 day. That's why I'm a day trader. And I give my price action analysis based on that perspective, okay? So if you are new here and you like what you're hearing, please hit the like button and please subscribe. And let's make this money together. Sheep style, baby. Bah! Now, guys, last week we had an amazing trading. Looking at this daily chart, guys, we have reasons to be short-term bearish, okay? We also have reasons to be bullish, but we are seeing more bearish signs than bullish signs. It can turn, it can always change any day. Not every trading day is traded equally, okay? That's why we have to approach it from scratch every single day. What's the next setup? Right now, the context is this. The bearish context, and I'm going to give you guys the bullish context as well, okay? So make sure you guys listen to both. But the bearish context right now is that we have a gap here and a gap here, which gives us what? You guys should know this pattern. A bearish island reversal. This is a bearish one, okay? If you guys look back on the SPY chart, you guys remember that we had an island here, okay? With the gap up, all right? That's your island. That was a bullish island reversal. These put on in bottoms, but they also put in tops. And we have here now a bearish island reversal. We talked about it last week before the move happened. And it was beautiful, okay? I gave you guys, what did I give you guys? A 589 level. Also wrote it in the Discord. Guys, I do have a Discord. Definitely join the Discord for the intraday analysis. But I wrote here on Friday, 591 must clear to put a back test of 593 and 595 in play because I was overall bearish below 595. But just because we're bearish don't mean we can't play back test. However, we didn't get the back test though. I wrote here also, overall bearish below 591, and if 589 fails next, 587.5 and 586 incoming, and I wrote 589 lost when we lost it. But how does it look like on the chart? What does it look like on the chart? Well, I use a 15-minute chart and boom, there you go. That's what it looks like. I use 30-minute chart, guys. 15 to 30-minute chart. And this example here is a 15-minute chart. You guys can see the 15-minute candle broke down my 589 level. I gave you guys these levels as well. I don't gatekeep my levels from you guys. Broke down 589, alerted in the Discord. Boom, and look at that. That was all she wrote. And never recap. If you played this breakdown, you will have your stop loss above 589. And you look at it, it never hit the stop loss and it smashed 587.5, smashed 586, even broke down 586 intraday, now trying to work its way back up right now as we speak. Now, the title of the video is about an important pivot level that I need to talk to you guys about, okay, which is that 586 level. So we have a bearish island reversal, okay? We broke down that 586 level. That 586 level was a previous pivot high back in mid-October. That was for an all-time high for a few weeks, for a month, oops. And then we broke it down in the form of a bullish island reversal. And guess what? Last Friday, we broke it back down. That was a very important pivot level. So for today, that's the pivot level I'll be watching. Above it, bulls may have a chance for a bounce, okay? We tested the 20 daily moving average. It did bounce. But I trust bounce off of critical support level, like the 20-day moving average, when it can recapture some lost level, and I'm looking at that 586 level. Okay, and above 586, I have 587.5, that 589 level, and 591. Okay, so now that we test the 20 daily moving average, if we can recapture those levels, get back above 586, get back above 589, then maybe we can get a bounce. All right, and maybe we can cancel out this island reversal. And the only way this island reversal cancels is if we fill the gap and eventually break above. Okay, so that 586 level is very important. For this to stay bearish, SPY needs to stay below 586 and break down 584-ish. That's around with the 20 daily moving average. We can zoom out a little more and look at the weekly, and we can see on the weekly chart, guys, what does that look like to you? Or my pattern, candle pattern people. Was that a piercing pattern? Piercing line patterns look something like this, right? Looks something like this, except it's in reverse. This is a bullish one. But this is like the opposite of that on the weekly chart. This is a dark cloud candle. That's usually a bearish 2-candle pattern on the weekly chart. We'll see how it plays out, right? But I'm a short-term trader. I like to look at the smaller details that will eventually lead to the bigger details. Okay, so if that dark cloud cover candle on the weekly chart is to play out, I need to see SPY below 586. That's a start, and then break down the 20 daily moving average. If that happens, guys, the way I show you on the 15-minute to 30-minute chart, you want to look to short and bet to the downside if we lose those levels, 586 and 584. That should put 582, 579 or lower in play. I would definitely be bearish, and the bearish island reversal will definitely play out some more if we lose those levels. Okay? That's the bear case scenario. And remember, the bull case scenario is the fact that we bounced and tested the 20. To take the bounce more serious, like I said, 586, 587.5, 589, and 591 all must clear. I can't fully call a bottom unless we get back above 593 and 595. Then getting back above those levels will definitely cancel this bearish island that we have here. Does that make sense? So guys, it's not about knowing what's going to happen beforehand. It's about reacting in the present time, trading in the present. I gave you guys the levels and the setups, and I show you guys how I use it on the 15-minute chart or 30-minute chart. Okay, guys, it's on you guys to react unbiasedly like a sheep. We call ourselves sheeps because we're followers of the price action. So if the price action starts clearing those levels, I would look to long level to level style. This is the important part because we trade with no greed. Risk management comes before anything else, even profits. If you look, for example, you look to long above 586 or 587.5, you will look to take profits at the next target. For example, last week I shorted 586 and I took most profits at the next level at 587.5. Once that level was broken down, and it hit the next level at 586, I scaled out some more. I left some runners, okay, until the end of the day, and then I just got out because I'm too scared to hold over the weekend. But that's what level to level. You get in one level, you get out on the next level, and if you want to try to catch a bigger move, you leave and do it with runners. Do you guys understand the sheep style trading plan here? That's how we do it. Up or down, using the levels and setups. No crystal balls. Triple Q as well has a bearish island reversal. Okay? Maybe it wants to calm down a little bit because that was a beautiful move to the downside. Maybe it needs to consolidate a little bit. But we got to pay attention to the level. If more downside is to be possible, 497.5 needs to break down. 496 needs to break down. And 494.5 needs to break down. All right, 497.5, 496, and 494.5. If those levels fail, this bearish island is going to continue downwards. We're likely heading down to 492 or lower. That's around where the gap is. Or maybe lower to retest this trend line. That's around 487, 488-ish. All right? But if we are to put in a bounce, where's that 20? Okay, if we are to put in a bounce, we need to recapture the 20, all right? The 20 is around 499-ish. Needs to get above 499. I have a fib level around 501. Got to clear those levels to put 504, 505.5, and 508 all back in play for the gap fill, guys. Look to long when we recapture lost levels and play it level to level. Otherwise, we break down 497.5, guys. We're heading down a lot lower. Tesla, well, there's that piercing pattern I was telling you guys about, the piercing pattern, and now we have a gap up here. Well, if this is a gap up, you know, you got to be careful catching FOMO, and you got to be careful with calling a top. You don't want to call a top. You also don't want to catch FOMO. What you want to do is wait for the right setup using the levels. Right now I have support at 344, 342.5, and 341. Do not look to short unless those levels fail. 344, 342.5, and 341. I will be a lot more bearish below 341. If we're going to start clearing more resistant levels, because we gap up don't mean we're going to crap, guys. Sometimes it gap up and keep going. And if that's the case, 346, 348, and 349.5 must clear to put 351 or higher in play. NVDA looks like that M pattern might be playing out, guys. Look at that. Got the big old, the left side of the M is playing out. Will we get the right side? Looks like it's in progress right now, guys. If 138 fails, we are heading down a lot lower, down to 136.8, 135, 133, 131.5, and 130. Holy moly, it's going to be beautiful. If the M pattern doesn't want to play out, that's fine. We can still make money to the upside. And we'll only trust the bounce if it can recapture some lost levels. 140, 142, 144. Those levels must recapture to put 146, 147.5, and 149 all back in play. IWM is just looking nasty over here. If the sell-off is to continue, the support at 228 must fail to put 226, 224.5, and 222 all back in play. Trust no bounce unless 230 and 232 can recapture to put 234 and 236 back in play. Please add these levels to your chart. Look to react. Apple still looks overall bearish to me still, but it's not showing much bearish follow through. Can it do it today? A potential double top here now and a potential M pattern as well. So if support at 225, 223, and 221.5 all fail, it's going to look real nasty bearish. We're definitely likely heading to 220 and 218 or lower. Okay, watch out for double top M pattern. We're still below the 50 DMA. Watch for the breakdown of those supports. Now, for this to be bullish again and cancel all this bearishness, the 50 DMA needs to recapture, and that fib level at 228.5 must clear. So 227, 228.5 must clear. I can't get bullish unless those levels clear. Can't get any more clearer than that. Amazon, nice gap down last week. Lots of some good profit taken after that new all-time high. Beautiful. Supports at 203 and 201. If 203 and 201 fails, more profit taking incoming. 199, 197, and 195.3 all incoming. All right. Now, if we are to bounce, then 204.7, 206, and 207.3 must clear. And that'll put 209, 210.5, and 212 plus all back in play. Beautiful profit taken for Meta. Let's see if we're going to get more, okay? I do have support at 553, 551, and 549. If those levels fail, especially 549, it's going to get a lot more nastier for the bears. But it looks like it's flagging right now, okay? And if this is just a regular flag and we're going to bounce, then resisted levels must clear. All right, 555 must clear. It's a good start to put 557, 560, and 562 all back in play. I'll probably call a bottom if we can get back or feel more comfortable calling the bottom. We get back above 562, but the price action must tell me so. And to me, it got to recapture 562 to be bullish. Microsoft looking nasty to me, bearishly. And for more downside, 415 and 413.5 must fail. And if they do, we're heading down a lot lower, down to 412, 410, maybe all the way down to 405, guys. That's what it looks like to me. I'm not trusting any bounce unless we can clear 417, 418.7, and 420, especially 420 to get high. To get the price back up higher, to put maybe even 428 back in play. Okay. Doge, we didn't get 100 likes, guys. Very disappointing, but I'm still gonna cover Doge for you guys. 37. I'm just gonna round it to 38 because all these numbers are just messing with my. It's a lot of syllables. But 38 cents is what I'm watching. 38 cents, 40 cents, and 44 cents. Those levels must clear to end this consolidation bullishly and send us to the back higher. I like to see 50 cent or higher hit, but Can't hit it unless we can clear 38, 40, and 44 cents. Can't really get bearish either. I do have my stop loss below 34.5 cents. So, I mean, it's still holding as support so far, but if that level's filled, we're likely heading down to 32 cents, 30 cents, and 28.5 cents. Okay, let's see if we can continue to hold and get a bounce that can clear resistant levels. Otherwise, we're still in the chop phase for Doge. Bitcoin is also consolidating. I would say as long as above 89.1K, I'm overall bullish. This flag possibly consolidating for more higher moves. Resistant levels at 92K and 93.3K. Clear those levels, definitely new all-time high. Maybe get to that 100K. But if it is pullback time, 89.1K needs to fail. 87.5K would be next support, with 86K and 83.3K below. Okay? All right, guys. Thank you guys so much for watching. Good luck this week. Good luck today. Remember, one setup at a time, one level at a time. Peace.